What's up, my friends, ladies and gentlemen? Jimmy here. This is a live stream, my first live stream of this month, of this beautiful month. April was a heavy month. It was actually the month of the retest, basically. May did not confirm April. May basically confirmed what happened from April to March. And now we have entered a new month, and a lot of information has entered our mind. And you need to understand that your mind, your brain, is a information seeking system. However, not all the information you're absorbing is beneficial, and more often than not, we are actually consuming way more information than actually needed, especially when people are edged out and they don't know what to do. Often, what they will try to do is they try to compensate their lack of edge, their indecision. They want to have more clarity by thinking that absorbing information and digesting information would aid them. And this is unfortunately not true. And this is one of the pitfalls and one of the ways why people are losing money. I have here a funny cartoon. It's kind of blurry, so forgive me for that. It's saying here, get all the information you can. We will think of a use for it later. It seems funny, it's a cartoon, but actually, this is us internally. So we always have a kind of self-talk. I do self-talking, you do self-talking. Self-talking is not something crazy, it's not stupid, it doesn't make you retarded, not at all. We all have a internal dialogue. Whenever you see something, you think, hey, let me bookmark this, or hey, let me add this to my favorites, only for you to add it to your favorites or just bookmarking it for the sake of bookmarking it and not revisiting it later. So ask yourself the question: how many times have you bookmarked something without actually revisiting that thread, for example, or that tweet or that article? And the same basically happens with trading. So, one thing we need to realize and we need to understand is Bitcoin and a lot of other assets, they have the tendency to range for a long time. And you need to ask yourself what's happening in the investors and trading's mind when things are ranging for quite a long time. Um, this is a range. Let me get this away and all these unnecessary arrows. Let me go to the 3-day chart and let me remind you that Bitcoin was ranging here for quite a long time, and it was ranging also here for a quite long time. So this was a ranging environment. As you can see, this was a ranging environment. This was also a really nice, good range. This was a range, although a small range, and this is obviously also a range. This is day 97 of this range. So from that perspective, you could say that this was a up movement with a strong correction. This was an up movement, and this was an up movement. So most of the time, as you can see here, the market is more in a ranging environment than that it is in a uptrend. So, for example, if you would be a momentum trader or just trading the breakouts, especially on the high time frame, you wouldn't have often an edge. So often you're edged out. Or if you're a mean reversion trader, these kinds of environments would give you a really nice setup. The problem is whenever people think they're edged out and they want to compensate their inactivity in the market, they think they can feed them by information and that would be enough to aid them and to support them. The answer is no, and this often leads to analysis paralysis. Uh, if you're edged out, there are actually two things you could do. One, sitting on the sidelines, and creating a strategy that would help you in an environment that where you don't have an edge, and you want to test that, you want to journal that, you want to deploy different strategies. The last thing you want to do is being overly obsessed with the news feed on your social media, because this has a lot of consequences. So one thing we need to understand is whenever we are chasing something, it creates dopamine. And whenever we are overly obsessed with something, for example, with crypto or Twitter, we're seeking so much information that we're getting overstimulated. And when you're overstimulated, your receptors cannot absorb the dopamine level. So what's happening is your dopamine, your receptors are shutting down. You're desensitize yourself. So you need basically more stimuli to feel the same. It's almost like an addiction. And when this happens, you're in a big problem, because whenever you do things that are pretty slow and they don't stimulate you, and normally they would give you some kind of pleasure, for example, a walk outside, or having a fun conversation with a friend, going out, going for dinner, for example. All these slow things, you won't enjoy them anymore. And this is what we call anhedonia. My point here is, this might make sense to some people, and maybe it might not make sense to other people. When you're obsessed with crypto, it's okay, but realize why you entered this crypto space in the first place. For me, for example, it's time freedom, financial freedom, and having a life that's really close to my core values. So imagine you're overly obsessed with crypto, and you're entered this space because of financial freedom and time freedom, and you're overly obsessed with this market. What you're actually doing is you're actually sacrificing all your time, not getting any value from that. And you entered this space because of time freedom. The irony is you're losing your time, you're not getting your time back, and most likely you're going to lose your money as well. So I highly urge everyone to fully understand how much time you're actually spending on social media and your daily routines. So if you start and wake up and the first thing you do is checking Twitter to see what's happening and checking your alerts and trading view, I don't believe this is a good way of setting the tone for the rest of the day, because you're immediately, waking up with a lot of stimuli. Ideally, this is my daily routine: is I wake up, I do my prayers, I go to the garden, I drink a cup of tea or a cup of coffee, I do things that are totally not related to trading, and then I open TradingView, I check my alerts, I check my portfolio, I check Twitter, and so forth and so on. But if you like, your normal routine is checking your portfolio immediately, checking on the alerts, you're immediately in a state of high arousal. A lot of stress is going through your body, and this stress most likely it will continue for the rest of the day. My point is here: the way how you start your morning will most likely set a tone for the rest of the day. So if you start the day with a clear mind, most likely you can tap into this clear mind for the rest of the day. For example, if you're hearing your alarm and then you snooze for the first 10 minutes, and then again 10 minutes, and then the next 10 minutes, most likely this attitude, this mindset of snoozing will continue for the rest of the day. Again, analysis paralysis will have a lot of consequences. So one of the consequences, and they are many, is one, it will paralyze you. So what happens when things are paralyzing you? Well, a few things. You will mistake the forest for the tree. You will not be able to make data-driven decisions. Most of the decisions will happen subconsciously, very impulsively. You will suffer from decision fatigue, mental depletion, and I always tell people you will lose first your mental capital and then your financial capital. If you're out of energy and out of willpower, don't rely, don't think that your discipline power will aid you. No, not at all. Your discipline power is a very limited resource, and it comes and it goes. The more decisions you have to make, the more information you have to absorb, the more thinking you need to do, the more depleted you will get, and the less quality you will make in your decision making process. Again, it will lead to a lot of impulsiveness. If you deplete yourself, you're out of willpower and discipline, you will make impulsive moves. So now ask yourself all the time when you made that impulsive move, you know entered the long, entered the short, you jumped into a meme coin in a so-called jam, you made a change in your portfolio impulsively. Ask yourself, was that a good move or a bad move? 9 out of the 10 times that you made a impulsive move, most likely those were really bad moves. So again, here you need to be sharp and protect your mental capital. Trading, most likely, um, is a patience game and a game where you want to protect your mental capital, and your financial capital will, if you have an edge and a strategy, will remain safe. Again, analysis paralysis will also lead to a lot of confusion. I see a lot of people following hundreds of people on Twitter, and it's not per se a bad thing. However, I do believe more less is more. If you follow a lot of people and let's say you followed 100 perma bulls and 100 perma bears, and you all respect them because they all achieved something in life in trading, this will not help you at all. I mean, ideally, you make decisions fully detached from whoever you're following on Twitter. It's easy said, difficult done. Every single bit of information that enters your mind will have somehow a effect on your decision making process. So here it's also very important whenever you pull the trigger, don't open Twitter to look for confirmation bias. Don't look for a reason to maintain your position or to close your position. Just follow your strategy. One another consequence of analysis paralysis is missing out good traits. By the way, ladies and gentlemen, if you want to hit the like button and share this video, I would really appreciate that. I do this video for you guys so you can evolve your mindset and grow to the next level. Let me see who I have here in the chat. I see Joe, Johnny, Waitos, a lot of legends here. Yeah, so let me circle back to analysis paralysis is missing out good traits. Here's maybe an example. I personally missed out this trait here. I have a trading plan and a trading strategy. And trading swing failure patterns is one of my strategies. Um, if I'm stopped out, I'm not so far away from a point of invalidation. And if it goes my way, it often gives me a really good R. Let me disable this because this is not relevant anymore. I was I was long here, Bitcoin, closed it here, um, and here I was on holiday. Normally, I would long this, but I'm pretty sure if things are going to the downside, and you see this swing failure pattern, and normally I trade swing failure patterns, but you have overly analyzed the market, and you're paralyzed. Most likely you're not going to enter a trade. This is just an example. So imagine you have a working system, and it has been proven many times. Even then, analysis paralysis can totally paralyze you, and this again can lead to depression because you're losing money or not making money. And if you're staying too long on the sidelines, I don't believe that staying on the sidelines is a bad thing, not at all, because we all need to know when we are edged out. I know when I'm edged out, and when I'm edged out, There's one thing I want to do. That's not trading and then sitting out, setting my alerts, and then executing whatever fits into my trading strategy. So, all with all, analysis paralysis, extremely powerful thing, and it happens quite quickly. And whenever you jump from one social media channel to another channel, from Discord to CoinMarketCap to TradingView to Binance and Instagram and whatnot, there's one thing you're actually practicing, and that's this: you're practicing a short attention span. And you're focusing too much on things that are happening locally, and you don't see the bigger picture. Even if you're intraday trader, I truly believe it's really good to once in a while just visit the 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 weekly chart, the monthly chart, the 1 day chart. Zoom out a little bit and don't get caught up by randomness and noise. There's a lot of noise in the market. Not gonna lie, sometimes I'm also suffering from this noise, especially when you have a so-called like red folder day with a lot of fundamental announcements. Um, this also affects my decision making process, but it shouldn't affect your decision making process for a too long time. Eventually, what I want to do is I would like to trade the charts. But if I know that there is some volatility kicking in, and and I know at this price section, I don't know really what will happen. I don't, on a scale of probability, I don't know what will happen. My best system is stay on the sidelines, wait, and execute. And I don't believe that overly analyze everything, going into the fundamentals, checking, FX calendar, checking, what the FA gurus are saying. I don't believe this will give me an edge. This most likely will more paralyze me than that. I don't see it as a way that it can fully support me. I believe it's quite interesting to understand what they're saying and to understanding their language and where they're coming from. But eventually, I want to be in full control, and I want to be in full control of my own process. And I don't want that other people, other people's system, other people's way of thinking, other people's framework, that it will interfere what I'm doing. Because if I need to rely on people, then the best person to rely on is actually myself and my trading system. And I think everyone, um, most likely everyone, most people, they have the capability to create their own system and to follow up with their own system by not only staying disciplined. It's always good to be disciplined. And I believe if you're disciplined in one area of life, for example, in sport or your career or something else, it's possible that you could transfer that level, or almost the equal, maybe also almost the same amount of discipline to trading. But you cannot fully rely on discipline. Eventually, what you want to do is executing good trading behavior by cultivating good habits. And these habits, you will require a lot of discipline to cultivate them. And habits are way more powerful than discipline. Why? Discipline is a fleeting energy. It comes and it goes. The more decisions you make, the less discipline you will have. Habits, however, see a habit as a internal wired program inside your mind. And habit is nothing more than executing a program that is just see it as the path of least resistance. And habit will go for the path of least resistance. Why? You already cultivated, or you already internally, you haven't done that. It's your mind, your brain created a neural pathway, and you just need a trigger and you will execute it. Just an example: if I reach my hand out to you in real life, you'll reach your hand out also. You don't need to think about that. That's a neural pathway. You have neural pathway for brushing your teeth, walking, jumping, and so forth and so on. You want to create that habits, the habits that will aid you in your trading journey. Discipline is good. Habits are better. Let me check if there are any questions. Um, yeah, I see some good interaction with Joe and Johnny and some other legends. I just shared my Bitcoin report on Discord. Maybe it would be beneficial to share it quickly with you guys. At the beginning, I told you guys Bitcoin more often it's ranging than it's trending. So we've seen here range, it went up since September. It produced seven bullish candles, although this is kind of like a doji candle, but nonetheless, the open was higher than the the close was higher than the opening. Another bullish candle, another bullish candle. This is a throwback, what I believe, and this candle here did not confirm the candle of April. So I believe the path of least resistance for Bitcoin in the next few weeks is, in my opinion, to the upside. There are like a few ways or few methodologies you can use to um, um, to determine like a potential target. What I would love to use is the Fibonacci level. This is a way because this is swing failure pattern. You could narrow it a little bit like this. It would be like 84K if you would include this wick here. It will bring you all the way to 87K. Another way to do it is just measure the distance from the low to the high, add it here on top of it. It's pretty much in line with Fibonacci. So I believe 86, 88K could be the next potential target for Bitcoin. If we quickly go back to the monthly, I mean, it's very obvious. The trend is to the upside. And in November 2020, we celebrated an event, the so-called the best time is now event, and the best and the B was written in the Bitcoin B. So we believe that this could be like the bottom, and it was a really good time to scale in into Bitcoin, into crypto, and it was. This candle here, I considered it just as a pause, and if I would connect this high here with a low here, it would give me a target of 175K for this cycle. So this could be the cycle top. Why I'm using the Fibonacci? Well, if I would use the same methodology here, as you can see here, the 1618 perfectly aligns with the top cycle of 2021. Just a quick tip, I do everything logarithmic. So the Fibonacci is logarithmic, the chart is logarithmic. Um, if you're in doubt if your fibs are on log scale or not, you can check it here. Fibs levels based on log scale. So yeah, I am well positioned in Bitcoin. I don't believe Bitcoin will do 10x in this bull cycle. 180K, 200K, very possible. 50% of my portfolio is in altcoins, and I might rotate more bitcoins into altcoins in the next few weeks or even months, as I believe the asymmetrical bet is still in Bitcoin, but this time is different. Why? We don't talk enough about this, but 5% of all bitcoins is in the hand of institutions through ETFs, worldwide ETFs. Of course, the biggest ETF is the US spot ETFs. They're holding the biggest, especially Grayscale, BlackRock, Fidelity. And now ask yourself, 5% of the entire circulation of Bitcoin is in the hands of these institutions or through ETFs. Now ask yourself the question, will they rotate from Bitcoin to altcoins? Most likely no. I don't see a client of BlackRock um, an institution. I don't see banks. I don't see pension funds. I don't see countries. I don't see governments. I don't see you get my point. People who are taking money serious and risk management serious, I don't see them rotating their money into altcoins. It will not go to the likes of Solana or XRP, Bitcoin Cash, Litecoin. The high caps. I don't believe this. Very, very, very unlikely that this will happen. So those who bought Bitcoin quite early with us back in 2020, yes, they have an increased purchase power because they entered Bitcoin quite early, or even from the previous cycle. That money could rotate indeed into Ethereum and altcoins, but the normal way from money from Bitcoin heading into flowing into Bitcoin, flowing into the major caps, the high caps, the shit coins. I believe this cycle is a little bit different, and I believe most of the money will most likely rotate into the hot narratives. And I believe AI, real world asset, um, deep in DeFi will most likely benefit the most from that rotation. But I believe this rotation is very different from the rotations we have seen back in 2021 or even in 2017. I started my crypto journey in 2017. So this time I do believe it's different, it's more challenging, and well, what to say, it's just it's a mature market. The market has been maturing, which is a really good thing. Okay, guys, this is all for today. Again, analysis paralysis, it will create a lot of dilemmas. um, Practicing a short attention span will not aid you. Don't believe and don't think that whenever you're edged out, you can compensate that by trying to absorb as many resources as possible. This is not true. The best thing is what to do is just to sit out, wait for the setups, wait when you can execute your edge. And that's the characteristic of a good trader and investor. Knowing when not to trade is more important than knowing when to trade. With that said, thank you very much. Hit the like button for me. Share this with your friends. If you like it, let me know. If you did not like it, perfectly fine. Let me know as well. Until the next time, see you around. Goodbye.